This program is brought to you by Connie Dodo of Connie Dodo Realty Group, 119 Pleasant Street, Methuen. When you want results, don't make a move without us.
Good evening to Dodo Real Estate View. I know a lot of viewers have asked for certain topics on the TV show, and one topic that we keep getting is mortgages, and how is the mortgage rates, and how is the market, and what's the climate like. So we've invited Colleen Mitchell here today. Thank you, Colleen, for coming.
Thank you for inviting me.
Yeah, we have Colleen. She's with Federal Savings Bank, and which is a great opportunity for people to get mortgages or refinance or whatever, but we'll get more into that as we talk about things. I guess one thing when working with buyers, I know myself, I always insist that they get pre-approved. Maybe we want to start talking there about what's one of the first things you do when somebody comes to you to request a pre-approval letter.
Well, the first thing I tell them is, number one, run your credit. Every program is different, and there are certain criteria for certain programs. A lot of people are very hesitant to pull their credit because they think that it's going to affect them, but the only way you're going to be able to buy a house is to run your credit. There's certain criteria. If your credit isn't where it needs to be, our company has a credit monitoring that will help you get you to where you need to be. But that is the first thing. It takes 3 minutes to run your credit, and you know what? Not everyone has perfect credit, but you know what? Everyone deserves to own a home, and that's the first step and the best step.
Right. In terms of when you pull one's credit, I know a lot of people say, don't shop around and go to different mortgage companies and so forth, because it's going to bring your credit down.
Yes, when you're trying to get pre-approved for a mortgage, you have to trust the people you're dealing with. So if you like the person you're dealing with and they pull your credit, don't go have everyone else pull it. The other thing you don't want to do when you're buying a home is open up other credit card debt, because through the whole process, they do monitor to make sure you're not incurring more debt. Like, people will go and say, I want new furniture because I'm buying a new house. Do not do it until you're closing. It's blown up more deals by people going out to buy new cars and new furniture when they're buying a home.
Or co-signing for a loan for somebody else.
Exactly. Never do that either, because
they think that's okay. I know.
That's right. So, yes.
I think that's one thing, instilling in people, and as myself, we educate people to the home buying and selling process. You do the same as mortgages. And we always say, do not spend a dime. But I think one thing that, a lot of people, like you said, are very leery about having their credit pulled, because it's like, oh my goodness, it's not so good. I know that you do a lot of credit repair. You've done it for some customers of mine, which is wonderful, to kind of get them on the track to be able to get good credit so they can purchase. Maybe talk a bit about that so people don't feel like the process is so cumbersome, or it's not going to happen, that they're not going to be able to get their credit repaired.
Correct. With the credit, never be embarrassed about your credit. You know what? We've all gone through bad times, and you know what? You just need someone to help you get better. It's like, having a cold. You need medicine to get better. With the credit, that's what I'm here for. That's what I do. You have to deal with people that have been doing it a long time. I've been doing this for 23 years.
I was going to say, 23 years in the business, and you're right.
I've
all
seen
the
everything.
Different programs and so forth, so you're right.
And it's well worth it, and you know what? A lot of people, say, well, I don't have the money. Well, guess what? You can a lot of the things on your credit you can settle with. There's so many different things you can do, but you have to take the first step. And then, there's in a lot of programs with the credit, once you get the credit, there's down payment assistance that can help you with the down payment. The first thing is the credit.
So say if somebody comes into you and I know there's a couple of avenues that you pull, 2 sources of credit.
We pull 3 sources,
three
three
okay.
bureaus. Mm-hmm.
Yeah. So if somebody comes in and their credit is 575.
You only need a 600. Which, guess what, 25 points can be a lot. It can be your balances. You could have a credit limit of 1,500, and you're at 1,501. You're over your limit. Guess what? That affects your credit. You can pay it down to 50% and get 25 points and a drop of a hat. There's so many little things that it could cost you. I had one that the credit score, I have to tell you the story. This girl was 20 years old. She had a 550 credit score. She had 3 kids. She's 20 years old. She had a 7-year-old.
Wow.
And I did the credit repair for her, and she bought a home. It took me 3 months to do it, and she talks about me all the time, and it's the best thing, but she didn't think she'd be able to do it. But you just have to have patience and just listen to what I tell you to do and do it, and it works. So 575 is not that bad, but you'd like to get it to 600, but with the down payment assistance, they like you to have 620. So like I said, nothing is impossible.
Right. Now, if somebody had the 575 and you say, okay, you need to get it up to the 600, what types of programs would be able to be offered?
FHA.
Okay, and the percentage, how much down for that?
FHA with the 600 credit score, you could put 5% down. The limitations with that is typically with an FHA, your back ratio, which means your mortgage and all your other debt can't exceed 55. Obviously with the 600 credit score, they really like you to be at 45. So you can't have all this other debt. But if you can get to the 620 and it's going to take you another month, why not get to the 620 and it allows you more flexibility with the 3.5% down?
Right, so 3.5%, not 5.
Right. 620 is a 3.5%, 600 is at 5%. But if you can get to the 620, to me, for that 1.5%, if that can get you, that money there can get you to the 620, why not do that?
Right. Now, and I know there's a lot of different programs, and I know you have a lot of different ones in terms of no private mortgage insurance.
Right, and lender-paid mortgage insurance, absolutely. We have Mass Housing has a program with no MI, but you have to keep in mind with the no MI, it's reflected in your rate. So when I'm giving you the rate and it's a little higher, you're like, oh my gosh, but if you look at the payment, but I will always give you options. I will do borrower-paid and lender-paid.
Right. So if there's no private mortgage, maybe go over that a bit so people understand what that is. I think that's...
The private mortgage insurance is to ensure the banks that if you default in the mortgage, that kicks in and pays the mortgage. So you lose the house, but I mean, that's what that's for. Now, typically you have it, you wouldn't have it if you put 20% down, but there are programs with 15% down with no MI. But like I said, there's always something. I mean, it's reflected in the rate, so just, you got to keep that in mind. But that's what private mortgage insurance. It's not a bad thing if you have mortgage insurance, because you know what? The way the property values have gone, there are people that get out of the mortgage insurance within 3 years of purchasing the home with 5% down. So that's very good.
Right. Yeah, I mean, and you're right. And a lot of times people will come to me to say, okay, how much is my house increased?
Absolutely.
So I can remove my private mortgage insurance, which could roughly run 100 upward a month on your mortgage payment.
Absolutely.
Yeah. I mean, with the way that the housing market is right now, I mean, we're still in a great position. Again, it's November, but you know, we're still doing well with that. And you know, the average across, you know, nationally, it's gone up 6-7%.
Oh, absolutely.
Housing, you know, and in some areas in our Merrimack Valley, our percentage has gone up even greater.
Oh,
you know,
exactly.
It's just, so it's still, houses are going up. So I do get people that will come and ask, how much have I gone up so I can remove my PMI? And then that's with the time for them to come to you to refinance.
Exactly.
You know, if the PMI goes up, you have to go refinance.
Oh, absolutely. The other thing, too, is I tell people when they're buying a home, their first home is 5 years. They're usually in it for 5 years. And then they'll come to you and say, well, Connie, look, I'm bursting out of my house. Can I make money on what I just bought my house 5 years ago to be able to buy my bigger house?
Right.
So, I mean,
that's what people, I mean, you know, it moves the market, obviously. So, and I know there's a lot of different types of loans, and I think some back probably 7 years ago, a lot of
the stated income,
right, a lot of rehab loans was happening.
Absolutely.
Because of the nature of what the housing market was like, with some houses abandoned and so forth. But maybe go over that, because a rehab loan, I think, is an awesome one, and I know you do the streamlined rehab loans. You're probably one of the best in the industry on doing that. I will say they happen, which is, it's a tough one to do.
Well, we actually, there's a couple of different programs. There's the home style rehab, and I'm actually going into a class for that, so I don't know too much about it, so I don't want to say. But there's also a program with that. But the 203K, you have a streamline and a full K. And as long as you do what I tell you to do, you are right. It's really smooth. And a lot of people love the house. And you know, I think from HGTV, that's really hurt the business too, because people go in and they want everything done. Well, guess what? That's not reality. I mean, I bought my first house, and I think my husband and I played musical chairs because we had one bar stool for the breakfast bar. But the rehab loan allows you to fix it and make it the way you want to, and you're still allowed to do it with only 3.5% down of the total acquisition between the house and the rehab.
Right. In the rehab loan, what it is if the house needs some work,
Correct.
the monies will pay to fix that.
Correct.
So you can move into it.
You can roll that into your loan,
Right.
which is a great thing. And if it gets, and we have construction loans as well, but that's a different animal. But the 203K, especially for first-time home buyers, and even people that are, upgrading, the rehab loan is a terrific loan, and you know what? It sells a lot more houses too, though,
Right.
because you can sell it.
Right. And people, especially if they're going FHA, if
Correct.
the roof needs to be done, or if there's things that have to be to comply with the regulation there, it's a perfect loan for it.
And the thing is with that, even if it's a 203K loan and you're allowed to still be able to move in because the work that you're doing is outside, that allows you to move in, because a lot of people think, oh, I can't move in because I'm not going to get these. No. And the contractor gets a certain percentage at closing, and then once the work is done, they send them a slip, the appraiser goes out, and the money's released.
Yeah.
So that's a good thing too. But you have to deal with the contractor that's not living, the contractor that has money to front it, basically. You know what I mean? And reputable, and we do all the checking on everything. Well, you've done them with me, but it's a great program.
Yeah, and it's important for people to know that, because some people say, oh, I like this house, but it needs work. So a rehab loan is tremendous, and it really gets you, puts your own imprint on the house as well, which is nice. You can do that.
Right out of the gate.
Yeah, which you typically don't have that luxury to do without it. So,
Correct.
You talk about, the HGTV and all that with the home buying. It's true. It's not,
It's made it so much more difficult for you.
When people look at that, it's like you say, okay, it's not like that. I put one of the memes on my Facebook. It was Kermit the Frog sitting there at the thing, and it was he was sitting in a little corner of a room, and it's like, this is home buying is not what you look at for HGTV. It's not like this, and it's so true. It's like, it's not, that's not reality sometimes.
Well, you're not going to get the perfect thing right off the bat.
Right.
A
little elbow grease, a little time, you have to wait.
Patience.
Yeah, patience is key.
Mm-hmm.
I think there's a lot of things that have changed.
Oh my goodness,
just
yes.
not in real estate and mortgages, and that's the whole picture here. But regulations that have changed within mortgages. I mean, over the years.
Absolutely. And I think, when we had our bubble burst in 2007, and there were a lot of programs out there, and you had a lot of loan offices that weren't probably the most reputable, and they were putting people into programs that they shouldn't be in. And the guidelines were very lax, and it was pretty much anyone, you have a pulse, you can get a loan.
Right.
So now with 180, now we have all the regulations with the TRID and having the buyers and sellers have their settlement statement 3 days or closing disclosure 3 days prior to, and we are so regulated now, it's amazing. But you know what, it's a good thing, because it keeps you in check. And you know what, and we're regulated like you more than anybody. I mean, it's that with the training and all of that, but yes, it's made it easier, but some of the things are really good, some of the things are a little over the top, but you know what, you have no choice.
Right. And I think it's important. I think one thing with the TRID, I know when it first came out, with the sellers and buyers disclosure to know their numbers 3 days prior to a closing, it's a good thing. Because there were times that we'd be waiting 2 hours before a closing, and people don't know what their numbers were.
Well, and the other thing too, though, is it's really hard to understand the CD, but you know what, I really focused on that, because I am neurotic about that, going over numbers, and so that I want everyone to understand what they're signing, because you hate to go to closing and they're like, I never knew this. That has really helped, and like I said, with the attorneys we use, I go over everything, all the numbers, so that the attorney doesn't really even have to do that. He does, but he knows that, oh, okay, I know Colleen's already done it, but it's extremely, and the closings now are much less stressful.
Because people know up front.
People know up front.
3 days before.
Exactly, and they have to acknowledge it.
Right.
So.
And if they had questions, they have time to ask the questions to understand it's not until you get to the closing table.
Exactly.
Which is really a great thing. I know you touched upon a little bit about the down payment assistance program.
Yes.
I mean, maybe kind of tell people what's out there and what's available in Mass and New Hampshire.
Okay, New Hampshire actually, it's all of New Hampshire, state and New Hampshire, the down payment assistance program. You have to go, you do an online class, which I can get the information. You can call me or call Connie, and she'll put you in touch with me. It's great. They'll give you up to 3% of the down payment, which is great. And if the seller pays some of the concessions for you, I've had closings where people come up with 1% of their purchase price. That's it. And if they're looking at
That's
250, that's
great.
2,500.
Right.
That's crazy.
Yeah.
Haverhill has a terrific program. I do a lot with Matt. I help, and even Lawrence with Anna Camargo, I do a lot to get the documentation together because, like I said, it's what you present, you're going to get better.
Right.
And Lowell has it, all the cities have it, but I have information on all the cities. Lynn has it, Brockton, I've done them all.
Now, there's pockets of money. There are
Correct.
pots, and sometimes they've exhausted their
With
pots.
Lawrence, yes, they have a certain amount in Haverhill, so if you're interested in doing it, you call and I'll say, okay, yes, there is money. And they'll always say, okay, like Anna will call and say, well, I have some left. That's fine, so it's not never ending. You just, New Hampshire, it's not as much. I haven't run into any problems with that, but with Lawrence, I have in Haverhill saying, okay, we're not getting money, I can't do any till, and there's also cutoff points. You have to have it in by a certain time, but it's well worth it. But you know what, you have to start getting pre-approved, run the credit, and that gives you time to be able to
tap into those funds.
Exactly.
Now, is that income driven? That is income
It is,
driven.
absolutely. There are certain income requirements that have, depending upon the family size, that you can't exceed. So if you're making $400,000, you can't get down payment assistance, but if you're making $400,000, you shouldn't.
You shouldn't be, right,
Exactly.
you shouldn't be tapping into that pool of
Exactly.
money.
So yes, but it's a lot of first-time home buyers. It's great programs, and you know what? To me, I call it free money. I mean, it's great.
Right. And it certainly gives people that extra increase on the dollar that they can purchase.
Absolutely.
The price of a home. So
Yes.
that's a good thing. You know, we're talking millenniums. I mean, this is what's happening. People are out there buying, which is a great thing. I think what's helped with the economy is the college students now, they're working. They have
Absolutely.
jobs, so now they're in the market to purchase homes.
Right.
I mean, I think we see a lot of that. I mean, I know what I experience as an agent, and you know, I'm sure it's the same stuff that you're seeing on your end in terms of millenniums. I mean, price point, where are they, you know?
Oh,
different-
absolutely. The big thing with the millennials, though, is they're living at home now, and they obviously have birth, they want to get away from their parents.
Right.
The biggest thing is student loans. The student loans cannot be deferred. The government has also made regulations. Now we have to debt you 1% of the payment of your total amount of student loans if they're not fixed rates. So for those out there, millennials out there that have adjustable rates, please refinance them. You can call me, I'll help you, guide you with what you need to do. Put them into a fixed rate that'll bring your payment down and allow you the ability to purchase. But that is huge, the student loans.
That's a big one. So the millennials, I mean, that certainly will help on that end. That's
Absolutely,
great.
and they don't know that. They say, oh,
Yeah.
it's deferred for another year.
No.
No. I mean, and some of them have $100,000 worth of student loans. Well, guess
Sure.
what? That's $1,000 a month I have to hit you for a payment if it's an adjustable rate. That's
big.
a lot.
That's
So
big.
what does that do? Your ability
you
is...
right out of it.
Exactly.
To purchase it.
Yep.
I mean, that amount, what would you say dollar-wise is going to decrease
Oh, my
purchase
God.
power?
But it's effective back ratio. So if you have $1,000 and you're making, say, $75,000, it's probably bringing it to 150 because you can't exceed because if they have good credit, they want to go conventional, you can't go over 45.
Right.
And you've got $1,000
Right.
just on that. That's just the student loans. That's not their car payment because 90% of them have car payments, right? Because they got jobs. That first thing they do
Right.
is, what do? They buy a car.
Right.
Because they got to get to the job.
Right, they have to get to the job. Or if they want to be closer to the T, closer to the Boston area, they're going to pay higher. So they
Absolutely.
they don't need the car.
Yes.
But yeah, it's just totally changed. I mean, from the time I started real estate 18 years ago to this point
Oh my
now,
gosh,
it's like it's a different world.
Absolutely.
In
It's a
terms of
different world.
financing, it's like, you know, and even just in terms of buyers and what buyers are looking for. Now what's happening too is people are moving more to the suburbs.
Yes, they had a thing on the radio. When I was coming back from my walk this morning, they were talking about that people are moving from the city to the suburbs, like Methuen.
Yeah.
Methuen
Yeah.
huge,
Yeah.
the influx of people
Yeah.
because they can't afford the city, so they
Right.
want to move to Methuen. And guess what? That's great. That's great for everybody.
Right. Yeah, I mean, and there's certain times that you get a better value. I mean, obviously,
Absolutely.
Methuen, I think, you get a good value, a nice community. It's just a win-win for everybody. In terms of, you know, we're talking millennials moving from the city inward, and a lot of them are moving not just because number one, they can't afford it, but they're looking at different things in terms of when they come home, they're not always wanting to be in the city as
No.
they did in the past.
Correct, they wanted to be able to stay out,
Right.
live, and now they
Right.
want the quiet life
Right.
and their home,
Right.
well, their home cooking.
Right, right, and they don't want, and they're not going for the bigger homes.
No, they're not, they're actually
Right.
getting the smaller ones.
Right, smaller homes, and we know the tiny, tiny little houses, 600 square feet. I don't know if that's going to make it in this area. I know it makes it in certain areas, but it's talked about, I mean, because of affordability, but I'm not so sure it's going to make a big bang in
No,
this
I don't
area.
think, no, I don't think it will, because I don't think there aren't too many 600 square foot house
Right, right,
condos.
right,
And
right. So, in terms of, we know that we've had lack of inventory
Oh,
over
yes.
the past year. I mean, it's been one of those markets that have been, different things as agents we've had to do, and I'm sure as mortgage people,
The
you've had to,
appraisals.
facilitate. Yeah, let's talk about appraisals.
I mean, it's just from the market going the way it went, with lack of inventory, people are, there's multiple bids, I mean, 10 bids, and it goes great, and then you've listed at 250, and it ends up selling for 299, then you have an appraisal issue, well, guess what? What are you comparing it to? You have to, I haven't had too many this year, which, knock on wood, which is good, but I can start to see it, though, on multis. That's
Right,
the
right.
multifamilies.
For the appraising.
Yep,
Yeah.
for the rental and all of that.
Right,
Because
right.
that rental market, it seems to have gone down for per unit.
It's still a strong rental
Oh,
market.
it is, but
It's, people are buying instead of renting.
Correct, for what
'Cause
you're paying for
they can pay
rent,
for rent,
they can buy
they can
something.
purchase. So, I mean, we get a lot of people that will come in and say, okay, I want to rent a 2-bedroom, and you say, okay,
It's like
you're $1,800, and it's like, why aren't you buying? So, a lot of times we'll have them meet with a mortgage person and say, here,
Well, and I tell
Buy.
people, right, and when people, and like I said, with Zillow, I'll get people that are calling to rent, and I'm like, well, if you're renting a place and it's $1,600, they're going to want first, last, and security. Do you have that? Yes. Well, why aren't you buying?
Right.
Because they run your credit has to be halfway decent
Right.
anyway, so
Right.
if this can, and that's how,
Right.
so it's all a
Right.
cycle, but it's
Right.
just talking to the
Right.
right people.
right, and that's what it is. And sometimes people don't even think about it.
Right,
And there are some people, and I have to say, that just don't want to be homeowners.
right, because they don't want to
So-
deal with it, and it's not for everybody.
right.
If you want it, but if you think it's something you want to do down the line, you should discuss it.
Right, right. I mean, that's a big thing to understand what you're going into. And I think as we started off talking, it's really to get pre-approved, understand
Absolutely.
what your monthly payments are going to be.
You have to be able to live. You don't want to be eating ramen noodle soup every day either.
Right, right. You're out of college, you're going to put your big girl pants on and big
Exactly.
boy pants on and step to the plate and pay
Absolutely.
those bills. Yeah, I mean, a lot of times I have, and it's not with you, sometimes different mortgage people, they'll pre-approve somebody for this crazy amount, and I always turn to them, and I know you do